afternoon from Los Angeles, and welcome to Stock Market Today, sponsored by Interactive Brokers. On the show, we're going to be taking a look at Intuit on the move after its quarterly earnings report, a semiconductor ETF, and a retail name that's holding up headed into its quarterly report. But first, we got to take a look at those major indexes. It's Alyssa Quorum here with Ken Shreve. And Ken, a very ugly day in the market today with the NASDAQ and Russell down about 3%. The S&P 500 and Dow not too far behind that. So very heavy losses sparked by fresh headlines related to both the trade war and on the Fed front.
Yeah. So it was very interesting. I mean, pre-market futures were actually pointing towards gains of about 0.3% to 0.4%. And then China came out with their retaliation that they're going to, introduce new tariffs on $75 billion in U.S. goods. And this was a day that was supposed to be all about the Fed and Jerome Powell's speech in Jackson Hole, Wyoming. The 10-year Treasury yield took a big hit today, so it looks like there are going to be more rate cuts between now and the end of the year. But it ended up being a pretty bearish session for the stock market. Russell 2000, NASDAQ down about 3% at the close, so pretty rough.
That's right, and that chart we were showing you a weekly view of things, but definitely pretty ugly. For now, on the NASDAQ, we are holding that low from earlier in August, so we'd like to see that continue at least.
Yeah, so I think that's the August 5th intraday low that we're watching, and it looks like it's going to close just above that. Clearly, the 200-day moving average for the NASDAQ, which is right around just below 7,600, is another support level to watch here. So the market, we've been talking about the resistance at the 50-day moving average, sort of a market that's been stumbling around, and again, there were just some bad headlines today that the market couldn't handle.
Yeah, I mean, there's a reason why we have the market uptrend under pressure right now. All of these uncertainties, big headline risks, but also the technical action just wasn't quite there, even though we were trying to move higher.
Well, we had a sign of strength in the NASDAQ last week, and then the very next day the market fell apart. So it's just like that type of price action really didn't instill much confidence that the sign of strength that we saw in the NASDAQ last week was going to work. But yeah, it was just a rough day. We're in an uptrend under pressure here, and it's a very risky environment for new buys. And we're just going to kind of follow the market here and see what plays out next week.
All right, well, let's take a look at some stocks, starting with Intuit, which gained a little over 1% in heavy volume on its quarterly report, but it finished the day at session lows, essentially, well off of its intraday highs after issuing this earnings report. What do you make of the action?
Well, it got dragged down by weakness in the broad market. Stock was up 5%. Powerful move for Intuit. Financial accounting software really has been a long time leader in the technology sector. So it gave back pretty much an entire gain today. But the numbers were pretty good. Sales growth accelerated from the prior quarter, and they just reported their fiscal fourth quarter. So the company said that full year sales were up 13%. That was above prior guidance of 8 to 10% growth. So it was a great earnings report. Just a weak stock market got in the way of the stock itself.
Exactly, because a lot of times we do talk about taking advantage of these earnings-fueled gap-ups, but you have to keep in mind the broader context of what's going on in the market.
Yeah. It's so headed into today, we were in a stock market uptrend that was, under some pressure. We knew that the risk level was elevated in growth stocks, and sort of back and forth action, just very, very tricky to navigate. But we saw another day of unequivocal institutional selling today.
Yeah, and chip stocks got hit particularly hard today amid the new trade war headlines, and the VanEck Vectors Semiconductor ETF fell over 4% today. It had been trying to hold on around its 50-day moving average, but today breaking below that level in heavy volume.
Yeah, so Intel gets about a 10-11% waiting in this exchange-traded fund, and Intel was one of the worst performers in the Dow today, along with Apple, of course. So seems like when there's good news around the China trade war, chip stocks outperform. When the news is bad, they're among the hardest hit, but pretty bearish action for SMH today. And you look at all the biggest decliners in the NASDAQ 100 today: NVIDIA, Advanced Micro Devices, Lam Research, Broadcom. You go on and on, declines of 4, 5, 6%.
Right.
So
and these names have a lot of exposure to China.
Yeah. So bad day for chip stocks.
That's right. Well, until we get some of these big issues, trade being this big issue that we've seen rear its ugly head this year, until we get that resolved, this seems like it might be a little bit of a tougher place to get into.
I think the stock market is starting to realize that the trade war with China is going to be long and drawn out, and there may not be any meaningful agreement before the next election. So the market may be pricing that in right now. So whether or not we see more downside in the broad market, chip stocks in general, remains to be seen. But there seems to be a lot of pessimism that these trade talks are not going very well.
Well, we'll have to see. There are some days where all of a sudden we get these really negative headlines, and then other days all of a sudden we get these really positive headlines. So we'll have to see if the conversation advances.
Well, President Trump was, if you're following his Twitter account today, he was, all over the place, talking about China, talking about the Fed Chairman Jerome Powell. So a lot of tweets that we're all over the place, frankly.
Yeah, lots of things for the market to digest, so we'll definitely keep our tabs on that. And last but not least, we want to take a look at a retailer that is holding up heading into its quarterly report, and that is Williams-Sonoma. It did fall about 1.4% for the day, but the relative strength line hitting a short-term high here, Ken. And this is yet another retailer that has been holding up amid this bout of volatility that we've seen as of late.
Let's not lose sight of some really great reports in the retail sector this week from the likes of Home Depot and Lowe's and Target and Walmart. I mean, retail earnings are looking pretty good. So I wouldn't be surprised to see pretty good numbers from Williams-Sonoma next week when they report. It's really another busy week of retail earnings. Ulta Beauty is also coming out. But Williams-Sonoma still has a pretty decent looking chart here in a time where a lot of stocks are below their 50-day moving average. Williams-Sonoma is still above it, just below a 70, 68 buy point. So market is expecting pretty good numbers from this company. Yeah,
that's right. We'll definitely have to see, because revenue growth has been coming in the single digits. Earnings growth the last 2 quarters has been strongly in the 20 to 25% range, but the annual numbers for the bottom line, it looks like analysts are projecting the low to mid single digits. So we'll have to see how the numbers come in next week.
It's one of the few charts in the market that still looks reasonably healthy here.
Yeah, that's right. And some other retail names haven't had quite that strong double-digit accelerating growth type Canson fundamentals, and they've been able to perform strong technically.
Yep,
so
absolutely
we'll keep an eye on that. All right, everyone, before we go, we want to let you know, if you haven't yet checked out the latest podcast episode, you should definitely do that. The Investing with IBD podcast has a new episode that drops every Thursday, and this week's guest is from Lord Abbett. So taking a look at the investing process from a proven institutional perspective, and a secret that might help you when you're looking at charts, a moving average that might be a little bit unexpected that could help you with figuring out how to hold on to some of these names for the long term.
Sounds great.
All right. And next week on the Investing Strategies show, I will be taking a look at emerging trends from cannabis to cryptocurrency. So if you've ever seen one of these hot new trends come about like we're seeing right now with cannabis, we're going to break down how to figure out the right way to profit from some of these emerging groups. So it'll be really fun. So you can go to investors.com/investing strategies for all the details on that. But that is it for us this week, and we'll see you right back here next week.